As Singapore companies are getting skittish as the US tariff deadline looms. The Singapore Business Federation has already fielded 1.5 times more inquiries about free trade agreements in the second quarter of this year compared to 2024. Now, with US markets becoming less certain, companies are scrambling for alternatives and leveraging FTAs to pivot trade flows to regional neighbours like Malaysia and Vietnam. Nadira Zaidi again with more.
These made-in-Singapore acoustic glass partitions are now found across Southeast Asia, including Indonesia, the Philippines and Vietnam. But breaking into these markets wasn't easy.
Early on, where we try to embark over overseas business ventures or opportunities, clients has been asking us, do we have such things like Form D or even some form of import duty tax-free kind of services for them or something.
To gain an edge over its competitors, the firm tapped on agreements last year, like the ASEAN Trade in Goods Agreement and the ASEAN-China Free Trade Area to open doors.
Before we adopted FTAs, our goods imported to these countries may be perceived a bit higher. But ever since the adoption of FTAs back in 2024, we experienced a revenue growth of 39%. And that is quite significant for a small company like ours.
The Apex Business Chamber says most companies that tap on FTAs are able to see lower tariffs or improved market access within 6 to 12 months. And it's seeing these agreements gaining ground amongst Singapore firms, with 3 in 4 saying these deals help open global markets, up sharply from just 1 in 5 last year.
Singapore has 28 free trade agreements with over 65 trading nations. According to the Singapore Business Federation, this covers about 90% of Singapore's exports. The number of FTAs is also expected to go up as coverage expands to include digital economy, intellectual property, and emerging areas like green trade and sustainability standards.
With US tariffs expected to return next week after the 90-day pause, companies are also rushing to tap on FTAs to reduce reliance on the US market and dodge trade restrictions.
So let's say China is being slapped with a 50% tariff. If Malaysia is slapped with 20, yes, it is still 20, but there's a gap. So countries say, okay, if they need to move production from China to Malaysia, how do they qualify? How much of the production needs to be done in Malaysia to qualify for Malaysia's FTA, for example?
SBF says the top 3 sectors tapping on FTAs are companies in the manufacturing, chemicals and logistics sectors. Popular markets include Malaysia, Vietnam, Korea, Japan and India. With high policy uncertainty, the Business Chamber is urging companies to make FTAs part of their long-term strategy.
Businesses now need to operate in a world of what I call clubs and fences. Now, businesses that operate in clubs will be able to benefit from lower tariff rates, will benefit from more streamlined regulatory approvals and even investment guarantees. Companies that are not in the clubs and where the fences are being set up will be blocked. If you are a business, you ask yourself, which country can I operate in with the most club membership? The good news is that among many other countries, Singapore is one of those countries that has the most club membership.
He adds that having more FTAs strengthens Singapore's hub position to attract investments as companies worldwide look to reconfigure their supply chains.